Welcome back. Well, we all know gold is one of the world's most expensive substances, and over 4,000 tons of the precious metal is bought globally, and yet only 7% of that gold is bought for industrial purposes. All right, compared to 93% for jewelry and investments. So our next guest believes that if gold stopped being mined for investment and recycling were to increase, there could be a significant drawdown in the need to further mine the metal. And for more, let's go straight now to Stephen Lezak. He's sustainability researcher at the University of Oxford. Welcome, Stephen. I guess, can you explain the concept of what you mean by a circular gold economy and what that would exactly mean?
Absolutely, Tara. When we say a circular gold economy, we're talking about a world in which gold is still consumed. People will still buy it for jewelry, for investment. It'll still wind up in technology and medicine. But the vast majority of it will come from recycled sources. And so the world already has thousands of years of above ground gold stocks to draw on. And these stocks already supply about 25% of the gold that's consumed every year. And so we would be talking about redirecting and essentially being smarter about how we use this resource that is so costly to extract. And so circularity is a way of directing our attention to focusing on these stocks that are already above ground instead of newly mined material.
Many investors, people who watch our channel, often use gold in a tangible way to really diversify the risk in their portfolios. Some of them are keeping it in safety deposit boxes in the bank. What challenges do you anticipate in trying to convince them to move away from that into a recycled product?
In some ways, we'd like to think that there are no challenges at all because we're not suggesting that gold shouldn't be an investment asset anymore. And this was the core of our research. We wanted to ask, does the world need gold mining if the world needs gold? Understanding that this underpins the stability of global markets, understanding its importance both to institutional investors and also around the world to people who live in countries with unstable currencies, having a bit of gold can provide some financial stability. And that's why our research said, well, can that system continue in place without adding new gold to bank vaults? And what we found and what we continue to hypothesize is that the answer to that is yes, that gold functions as an investment because of its scarcity. And so making it more scarce is in some ways like taking gold and making it more like Renaissance art or a Stradivarius violin. It doesn't become any less valuable. In fact, the opposite is true.
Yeah, I was going to say that would increase the value incredibly. What would that do to markets? And you think about central banks that really depend on this commodity as well. And what role would they play in this?
Absolutely. And so to be very clear, our research is not in support of any dramatic, immediate end to gold mining. We see this as having to follow the paradigm of a just transition, very much in line with what we're seeing today with coal mining. So this is a responsible drawdown. It's slow enough that it doesn't shock markets. What that means for investors is that they might still retain the same amount of capital invested in gold, but that the physical representation of that same amount of capital might become smaller. And as we know for investors, the value of gold is in its economic value rather than its practical value. And so in theory and in practice, that shouldn't have a huge impact.
Well, where it might have an impact is developing nations. We know a lot of these gold mining companies provide a lot of jobs in these areas, and they have taken steps to really mitigate impacts. What kind of overall impacts do you see in these areas?
Yeah, it's such a good and important question. There are, to be clear, millions of people around the world whose livelihoods depend directly or indirectly on gold mining. And these frontline communities must be supported. They are the first unit of consideration when we talk about sustainability. But we also have to be clear, when we talk about gold mining worldwide, especially in developing countries, these are not necessarily safe, desirable, happy, healthy jobs. These are oftentimes professions of last resort for people who have no other alternatives. And so our role as responsible consumers and responsible investors, especially in affluent nations in the global north, should be to provide economic security for those folks who desperately need it so that they have alternatives other than going and working oftentimes backbreaking, dangerous jobs, exposing themselves and their family members to mercury. There are better alternatives for them, and we have ways of making that happen.